So this is the pound and dollar analysis for Friday the 20th of October. Now let's look how prices, how the currency pair traded on the 19th. So on the 19th we did, for the analysis, we did mention the 200 period moving average potentially acting as some resistance, above which we had a 400 period moving average here in black, and we did have this level at 32.81. We did have strong in the most recent past. We did have strong, as can be seen here. The 400 period moving average did act as a resistance on several occasions before we broke down in prices. We've come down to the 32.47 level, 31.47, sorry, and we did come up to the 200 period moving average. We did stall on this occasion here on the 18th. The first indicator that the 200 period moving average will act as resistance. On the 19th, we did come into the 200 period moving average again, and we weren't able to successfully break and hold above that level, and we did sell back down into 31.47. We have tried again to test the 200 period moving average, we are unable to, and the prices have come down to 31.47. So prices currently are testing. Prices are currently testing in 31.47 from above. Now, in the most recent past, we have tested on quite a few occasions now, and the frequency of the tests for me would likely indicate that we are likely to see a breakdown in prices below this area of support, as there doesn't the bears appear to be being control in the short term here, as the bulls are not able to overpower them and test the 32.81 level. So if we do break down from 31.47, we'll be looking at 30.93, which is a weekly pivot from a couple of weeks ago. As it is so close to 31.47, we may not see much of a reaction, as prices may trade through that. Below which we'll be looking at a round number of 130. Just below that, we've got 129.83. And we're unlikely to see prices trade all the way down to the next level, the next area of interest in around 128.80. So we'll also be looking at some other levels in and around the 130 level on the weekly chart when I have a look at the higher time frames. So let's imagine that in fact all these tests of 31.47, the break to the downside, which I'm expecting, does not play out, and 31.47 does hold for a break to the upside. Again, we would like to have resistance at the 200 period moving average, currently sitting at 32.18, above which we've got the 400 period moving average currently sitting at 32.44. Above that, we would have the horizontal level of 32.81, and above that 33.04. 33.04. Now, I can't imagine prices would go much beyond 33.04 to the upside. It's extremely, I would say it's pretty unlikely. I wouldn't say it's extreme, but it's pretty unlikely. But a move above 33.04, again, we'll be looking at this horizontal level of 33.50. But overall, my bias is to the downside in light of the 400 period providing resistance, and now the 200 period providing resistance. Both moving averages are currently the gap between the two of them are currently is tightening, further adding to the likely resistance to the upside, and prices do not appear to be able to escape. There doesn't seem to be a lot of buyers in and around this 31.47. We've had a few moves to the upside, but the momentum has not been particularly strong. So that should pretty much conclude the execution time frame. So let's just have a look at the higher time frames. So on the monthly chart, on the monthly chart, September looked very promising. We did appear at one point we're putting a bullish engulfing candle, but since near the end of that month, we've had some selling which has persisted into October, and this selling, again, we're heading towards the lows of October, and lows of October was at 30.27 so far. We are trading above 31 at present, but we may go on to test these lows by the end of the month. So overall, the trend on the monthly chart for me is while it does appear bullish, we have to bear in mind that there does appear to be a change in the market, especially over the short term. So let's have a look at the weekly chart, and as you can see on the weekly chart, we did have a strong move to the upside to the 36.50 level, and we did sell off quite a bit all the way down to the dynamic level of support at the 20-period moving average. 20-period moving average has acted as support on several occasions now, in light of the price is posting higher lows, which were bullish in price action. Last week was a bullish week. I did expect continuation upwards to possibly test the 36.50 level at some point in the near future. But the fact that we weren't able to see much of a follow through this week, we didn't see prices trade much above the open, and in fact we've seen prices retrace quite heavily so far this week. So we look poised to retest the lows of last week and possibly this 20-period moving average. The 20-period moving average currently sits at, let's just get the scaling on the chart correct. Let's just see where our 20-period moving average. Our 20-period moving average currently sitting at 130.63. So we might see a reaction at 130.63 before going on to 130.27, which was a low of this week. Where was it? 30. The low of the month so far, and yeah, 30.27 before moving on to the 130, the round number. So let's just have a look at the daily time frame, see how prices have developed. So on the daily time frame, we can see here, let's just have a look at the left of the chart. We've had our lows, higher lows. Prices pushed all the way up to the 136.50 level, and we've come down to the found support at the 400-period moving average. We've moved up, but we've found some resistance at the 20-period moving average now, in and around an area where we did see some selling in the past, in and around that 32.81. Now we did move slightly above that, but the selling momentum has come into the market. The bearish candles have been larger than, say, the immediate bullish candles to the left of them. So that likely indicates a shift in momentum. So if we were to interpret the 36.57 as being the low, the high, currently we have posted a lower high in and around the 17th. Well, it was about 16th, wasn't it? Yes, in and around from the let's see where the first bearish candle was, if this works. The 16th. On the 16th, and we've had in light of the previous 4 days, we've had bearish days on 3 of those occasions. So we could interpret that as being a lower high. That being the lower high, we should expect prices to go down further. Now, prices could go down back to this 400-period moving average, currently sitting at, let's see where it is. It's at 130.26. Again, 130.27 is the monthly low, so it would definitely be an area to possibly target and look at. The 400-period moving average possibly providing dynamic support as well as the monthly low, beneath which we're looking at a big round number of 130 and 129.83. We're unlikely to get beyond 129.83 on Friday the 20th of October, but it's definitely an area that we will be looking at. So that should pretty much wrap up the analysis for the pound against the US dollar. So before I go, LCS, like, comment, subscribe. Thanks for watching.